Welcome back, focused learners. I'm so excited to have you here for another explainer. If you're looking for a distraction-free, straight-to-the-point breakdown of some pretty complex financial data, well, you've definitely come to the right place. Today, we're diving deep into Korn Ferry's fourth quarter and full-year fiscal 2026 financial report. It's a really fascinating look at a massive global consulting firm that essentially specializes in unlocking human potential. We're going to see exactly how their own business performed during a period they actually describe as an uneven economic environment. So get ready, because the numbers we're about to unpack tell a seriously compelling story of resilience and strategic growth. Let's jump right in. So here's our roadmap for today's explainer. First, we'll hit the FY26 headline financials, then navigating an uneven economy. Third, performance by solution. Fourth, returning shareholder value. And finally, we'll wrap up with looking ahead to FY27. All right, Section 1, FY26 headline financials. Let's dive right into these macro numbers. Right out of the gate, I want to highlight this massive figure, just to ground us in the sheer scale of Korn Ferry's operations. $2.9 billion. That is their full-year fiscal 26 fee revenue. Now, this represents a solid year-over-year increase of 7%, or 5% if we're looking at it on a constant currency basis. To generate nearly $3 billion in fee revenue in a single year across global markets, that is a huge testament to the fundamental baseline demand for their organizational consulting and talent acquisition services. And if we zoom in on just the fourth quarter, we see that same 7% year-over-year growth. Q4 fee revenue jumped from $712 million in fiscal 25, right up to $759.8 million in fiscal 26. But here's the kicker. Alongside this top-line growth, their net income margin for the quarter actually expanded by 60 basis points to 9.6%, which translates to $73.1 million in net income. So the really crucial point to take away here is that they aren't just bringing in more money. They're actively and effectively managing their bottom line at the exact same time, even with increased compensation and service costs. Pretty impressive, right? Moving right along to Section 2, navigating an uneven economy. Now, what's really fascinating here is how Korn Ferry CEO Gary D. Burnison frames this whole success story. He said, and I quote, "This marks our fifth consecutive quarter of top-line growth, underscoring the strength of our strategy and the increasing relevance of our solutions, all amid an uneven economic environment." I really want to emphasize that phrase, uneven economic environment. It takes that 7% growth we just talked about and frames it not as some automatic market lift, but as a hard-won victory. It really suggests that companies are actively seeking out Korn Ferry's help precisely because the economy is tough, and they absolutely need to optimize their workforce and leadership right now. Burnison also gave a big shout out to the We Are Korn Ferry mindset, which is basically their collaborative approach across the entire firm. He praised the expertise and passion of their colleagues globally. You see, their core mission, acting as a catalyst to unlock potential in people and unleash transformation across organizations, well, that's directly tied to their financial performance. When their clients hit friction, Korn Ferry steps in to synchronize their strategy, operations, and talent. It's like putting all the pieces of a giant puzzle together. Okay, let's break this down further in Section 3, Performance by Solution. We're going to start things off with the absolute highest performing segment. The CEO specifically called out double-digit growth in this area, so let's look exactly at where this massive momentum came from, and that is professional search and interim. In Q4, fee revenue for professional search and interim hit $149.1 million. Guys, that is a massive 14% year-over-year increase. It's literally the highest growth rate of any segment we're going to look at today. Adjusted EBITDA came in at $33.9 million, with a very healthy 22.7% margin. So you might be wondering, what exactly drove this? Well, the source data points to two main factors. First, over in their permanent placement division, they saw an increase in the weighted average fee billed per engagement. But the real standout? That's their interim division. They experienced a 15% increase in the average bill rate for interim workers. This just brilliantly illustrates how inflation, or the high demand for specialized short-term talent, directly fueled Korn Ferry's top line. Now, to give us a fully objective view of the whole business, it's super important to contrast that huge double-digit growth with the one segment that actually saw a bit of a pullback. So, while professional search and interim surged by 14%, Korn Ferry's digital segment experienced a slight 3% contraction in the fourth quarter. Digital fee revenue dropped by $2.3 million, down to $89.3 million. However, and this is a big however, despite this slight revenue dip, the digital segment maintained a highly profitable adjusted EBITDA margin of 31%. So, what does that tell us? It shows that even when a segment is facing a bit of a headwind, their operational efficiency remained absolutely rock solid. Let's shift gears for a second and look at the other major pillars of Korn Ferry's business. While professional search was clearly the high-growth catalyst, executive search and consulting really provided the steady, reliable volume that anchored the entire quarter. Both of these segments posted a very solid 7% year-over-year growth. Executive search is still their largest single segment by revenue, pulling in $242 million in the fourth quarter, with an impressive $64 million in adjusted EBITDA. And the data shows us that this was driven by more search work happening at higher levels, which bumped up the average fees billed per engagement across all their regions. Meanwhile, consulting brought in $181.9 million. And what fueled that? Well, the data specifically points to higher fee revenue in leadership development, assessment and succession, and organizational strategy offerings. Basically, this tells us that companies are pouring money into evaluating and training their current leadership teams so they can navigate this uneven economy we keep talking about. Next up, Section 4, Returning Shareholder Value. Let's see what all this means for investors. Okay, this is a very specific and frankly very telling figure. During the fourth quarter alone, Korn Ferry repurchased over 1.24 million shares of their own stock. That totals up to $78.8 million. When a company buys back its own stock at that kind of scale, it's generally a massive signal of internal confidence. It's their way of telling the market, hey, we believe our stock is a great value and we have the cash flow to support the business while reducing the number of outstanding shares. But they didn't stop at share repurchases. They followed that up immediately with $28.3 million in dividends paid out to shareholders during the quarter. When you stack the share repurchases right on top of the dividend payouts, it totally reinforces the whole narrative we've been building today. This is a company showing remarkable financial resilience and a deep, deep commitment to actively rewarding its shareholders, even when the broader macroeconomic picture's, well, kind of bumpy. And finally, Section 5, looking ahead to FY27. Let's talk about what's next. So, as Korn Ferry closes the book on a highly successful fiscal 2026, their messaging is pivoting strictly toward powering performance and accelerating growth for the future. They've clearly proven they can execute, but you know the market, it always looks forward. So, what exactly are they promising for the first quarter of fiscal 27? Here are the exact metrics we need to keep an eye on for next time. For Q1 of fiscal 27, Korn Ferry expects fee revenue to land somewhere in the range of $725 million to $745 million. And on the profitability side of things, they're guiding for diluted earnings per share to range between $132 and $138. This guidance gives us a really clear benchmark. It shows they're expecting sustained, robust volume, keeping them comfortably in that $700+ million territory per quarter. And that brings us to the ultimate question. Today, we've looked at some incredibly strong data. $2.9 billion in annual fee revenue, an explosive 14% growth in professional search thanks to higher interim bill rates, and well over $100 million returned to shareholders in a single quarter through buybacks and dividends. And all of this was achieved in a really complex economic landscape. So as Korn Ferry continues to synchronize strategy and talent for the world's forward-thinking companies, the big question is, can they maintain this impressive momentum into fiscal 27? It's definitely going to be a fascinating stock to watch, and those upcoming Q1 results, they'll be the ultimate test. Thank you so much for joining me on this explainer. Keep learning, stay focused, and I will see you next time